Hey guys, welcome back. Hope you had a great week. So last week we discussed why we were leaning bullish, how we opened above this level, and I said as long as we held above 5161, we were very likely going to push into 5261. You can see we pretty much have pushed into resistance, which means we are kind of at a crucial juncture in the market. I said that whether we were bullish or bearish, we would be bullish at least for the first couple of days. We didn't have like a super aggressive move higher. We were relatively, I would say, slow movements up, gradual movements up, like forced buying higher. So yeah, now the level moves from 5161. The most important level now is 5265. You break over 5265. And then, like we discussed, we push into 5300, 5350, make a new high, follow along the red path. Alternatively, this again is super important level that has acted as resistance. If you do reject, I do see a hard rejection down to 5161, and that would be a more bearish pattern. It would ideally, any rejection would just have to be minor if you want to be bullish for this to continue higher. This is what the bull path would look like. But yeah, this is an important level to keep an eye on. Let's look at VIX, right? We pushed down, right? You can see here we pushed directly into 12.5, which is our level of support, you can see, from many years in the past. And we have gapped up. So again, that could again be a sign of weakness. If the market continues, wicks, right, continues pushing higher, and we can break above 14, a break over 14 would kind of give us a signal that, yeah, we're kind of serious. Otherwise, a minor push to 14 and rejection is probably what I think is going to happen. But yeah, to be cautious on the market, I would like to see wicks above 14. And the 10-year, again, we discussed how pushed up to the top of the channel, bearish reversal. Such kind of reversals usually end up moving lower, and you can see we also have a channel. So again, yields being low again is kind of bullish the market. So kind of looking to see if we break higher to continue pushing to the upside. And the dollar, alternatively, you can see here we bearish reversal, then we had an oversold bounce. Now this level here at 105.15 is super important. You stay and stabilize above, you'll be able to push higher. You break below, you can see this is a bearish reversal pattern. You break below, then very likely you're not going to sell off lower, which again is, what is it? Bullish the market. Exactly. You can see if I had to force a channel, you can see we are kind of in a channel. So dollar still has lower to go, which again is bullish the market. So yeah, with all that being said, let's look at the chart for Apple, right? Before that, QQQ, right? Last week again, I discussed above 437. We're going to push back up to 445. So far, we pushed to 442. So again, same thing I explained for SPY would kind of apply here. If we are bullish, would likely have very little sell-off and continue to the upside. Anything, if we do come back down to 437 and we break it, we do know we have a gap to fill. We're very below 437, we're easily going to sell off to 426 and probably even 400 come down to fill this gap. So that's why this level here, now I would say 449, 448, 449, super important on the Qs to get above, to continue pushing. You can see here, bigger picture, this is also a long-term channel. So to keep pushing to the top of the channel, we would need to break over 445 and holding 436 is super important on QQQ. And IWM, again, you can see the same two paths. We would need it push over 207 and continue higher to get 220. If it starts to fade below 202, again, has much lower to go. So those are all the important levels in the market. With that being said, let's look at Apple. It does. You can see we are gapping up. It does again. It's formed a pennant. So above 185, I still think we see 188, 190 on Apple. So this could be a nice chase short term on Apple. That's why I have calls on Apple for a short term chase this week. Next level the next stock I have is DKNG. Again, the reason for that, it's been super choppy, and again, it's had a pretty extended move to the upside. I personally see this as a wave 3 and a wave 4. So you can see here, I draw a channel this way and I draw a channel this way. So we start to break 43, we break below 43. This looks like a bear flag that comes back down into support to finish that wave 4 before we push higher. So that's why right below 43, we have 42, 41 as our targets on DKNG. The next one I have is Cake. And again, the reason for that is had a nice gap up right on earnings, and we held the gap up, but you can see here we pushed right into resistance. So if this is bullish, and you can see we have formed that pennant, if it wants to break out, as soon as it gets above 37.6-ish, it has a lot of room to the upside to 40, 41. If this is breaking out, we should have a continuation this week. Otherwise, a rejection here and we probably stay sideways. So that's why the level at 37.7, 37.8 is super important to break. You can see here, we've just distributed sideways, had a nice earnings gap. So now we need to see if the gap up follows through. So that's why I have cake. And last but not least, Mara, again, it is looking like a bear flag, but again, I've definitely seen these like just bounce off the bottom of the channel and continue higher. So for this to short this, let it break like 17. If it can break 17, then we're gonna push down into 16 and 15 and even 14. Come down, you can see here, this is the channel of Mara. So the bottom of the channel is at 13.2. So would need to break down first before you short it. So keep an eye out for that. All right, guys, have a great week.
Subscribe to Leduc Trading YouTube channel for more Wolf's weekly Wavelist videos and other content.